Test, test. All right, what's going on, guys? So today we are going to be covering the FOMC meeting that's going to be happening in about 4 minutes. I'm going to be sharing my screen. Just give me a little bit. I'm going to give it some time for people to start tuning on in, posting it on Discord. One quick second. 2 p.m. Eastern time is in 3 minutes, right? There we go. The press conference. We are live at 2:30 p.m. Oh, for the press conference because it's 30 minutes after. Yeah. All right, should be loud enough. Can you guys hear me and see me okay? Quality looks good, Justin, on your side? Okay. Fed rate monitor tool according to investing.com, just so you guys could see this very quickly. I'm going to start sharing my screen. We have the Fed rate monitor tool coming in at a 95.9% probability that the Federal Reserve is going to pause, a 4.1% probability that the Federal Reserve is going to cut interest rates. Now, what exactly does that mean for people like you and I? Especially right now with such a high expectation that the Federal Reserve is going to pause. I don't expect the market to see too much of a reaction. It's not what it was before when the Federal Reserve was like aggressively announcing rate hikes of like 3/4 of a basis points. That's when it was very significant each Fed meeting. Now, pretty much what we're waiting for is for the Federal Reserve to cut interest rates. I just don't think that we are there yet. I think it's not expected until Q2 of 2024 that the Federal Reserve is actually going to start cutting interest rates. When it comes down to NASDAQ is down 1%, but if you look at it from where the market opened at to where we're at right now, pretty much break even, right? From where we opened to where we're at. So not talking about the movement during extended hours, but where we're at right now. Tesla, break even in the sense of where it closed at yesterday to where it's at right now. A really nice recovery there. Google stock has dropped with its sell-off after reporting quarterly earnings. It beat both earnings per share and overall revenue, but its revenue for its ad rev was down, causing the stock to drop 6.3%. And at a $1.9 trillion market cap, it lost $120 billion in less than 24 hours. Talk about a bad day, but guess what? They're still $1 trillion company, so it ain't as bad for people like you and I. And here it goes. We got coin dropping. Let's see. 2 p.m. I'm not seeing anything. A lot of movement on NASDAQ. A lot of movement. So let's see what was announced. All right. Looks like we're seeing some selling pressure. Beautiful drop here on coin. Just want to take a bite. My damn chipotle. Rates are left unchanged. Love it. All right. I'm buying to cover. There it goes. Yep. So the next one is in 6 weeks and 6 days. That's going to be March. What is that? Let's close that out. Yep, still stayed at that 5.5%. So not anything going on there. DWAC, a lot of consolidation, no sell-off there. Nothing to do there. Some sell-in pressure, some sell-in pressure. And this is the really, I would say, frustrating part. So just for those that are a little bit newer that don't understand what is going on, right now the FOMC just announced that there was a pause. So not a rate cut, not a rate hike, but a pause. This was already factored in, so it's not like it's a surprise, but yet the market is pulling on back. Could it be an overreaction? Possibly. But the thing that I also want to remind you is that in 28 minutes, Jerome Powell is going to be speaking. And when he speaks, it is often more important based off of how he answers questions. He has this little script that he reads during his speech. It's about a 2 to 3 minute speech. It literally is like, it sounds the exact same every single time. With that being said, he then begins to answer questions from reporters from different news outlets, from like the Wall Street Journal, New York Times, stuff like that, right? We have some people that are reporters there that are some of our favorites, right? Right, Justin? It's an inside joke for those that tune on in often. But other than that, it's based off of how he answers those specific questions that can give us a little bit more detail if the Federal Reserve is more hawkish, meaning that they're more willing to raise interest rates, or more dovish and less aggressive and more willing to potentially cut rates. So a common question that is most likely going to be asked is, how soon can we see the Federal Reserve cut interest rates? Is it before Q2? Is it next month? Is it still being taken meeting by meeting? And that's kind of like the feedback that is given to us by Jerome Powell, who's the head of the Federal Reserve. But he also does a really good job not giving too much information, as also his part is not to influence the market, but the jobs of the reporters are obviously to try to get that info out of him. So as you can see, 2:30 p.m. Eastern time, that's when that's going to be going on live. And until then, we just have to wait for the market to react. So I'm just going to post it here. So FOMC Fed paused, meaning no hike, no cut. I just want to explain it so everyone understands, even our beginners that are just getting into this. I'm going to do another buy to cover. So what this means is I am covering, locking in profits in the short position that I've taken as coin became overbought. If you're like, Ricky, I didn't know that you were taking a short position on coin. It would have been so cool if I would have known. Well, guess what? I shared it with my LPP team. I only keep them up to date. And again, you don't have to be a part of it, but I made them aware of what my goal is, what my intention was, when it is that I added more to my short, what my goal was to cover, and stuff like that. So not only do they get to watch me trade live every morning, but they also get access to these updates that throughout the day, if I choose to take trades or I see specific things either setting up or coming together, then I keep them up to date within that Discord. And again, it's the second link in the description down below if you guys want to join. And if not, again, you guys can just stay subscribed to the YouTube channel. Which one? Oh, I thought I did. There it goes. Okay. All right, and you guys, for the meantime, I guess we can leave it up to you guys to decide. But we have about 1,500 of you guys here. And if you guys want me to stay live until Jerome Powell begins to speak, then let me know. Drop a thumbs up. Let me know. Where are we at right now with likes? We're at 189 likes. Let's get it to half, 750 likes. So 750 likes, I will stay live. If not, it's all cool. We at least hosted this live stream. So I just want enough of you guys to tune on in and to stay with me when Jerome Powell begins to speak. It's probably, in my opinion, the most entertaining, but it's also, it can get quite boring during the later part of that live. So I was thinking maybe go live from 2:30 Eastern time to 3 o'clock Eastern time is normally when most of the good questions are asked. from our favorite people and favorite journalists. What's the names? Do you remember? Colby. I know that one. You guys have to let me know down in the comment section which one's your favorite reporter. All right. Just so you guys can see my screen while I'm closing out my trade. I'm going to do a limit order here. And the reason why is the spread between the bid and the ask is a little bit too big. So I'm going to bring it down to 132.27. Let's see if it pulls back enough so I can properly exit the trade. No update on that yet. That's funny. Here we go. There it goes, filled. So I've reduced most of my position for my coin short. So far on the day, I'm up $9,164. Started off today in the red, just so you guys know. My first video that I uploaded today, I showed you guys, I think I was down 2 or 3K. Wasn't too worried about it. Again, I trade with a little bit over $500,000, so being able to come back from a smaller loss wasn't much of my concern. I just knew that I needed to stay patient and wait for coin to become very overbought. Coin has been recently selling off, so it doesn't surprise me that it's most likely going to retrace back down to the moving average, which is right around 127. Doesn't mean that it has to happen. Of course not. Patterns tend to repeat themselves. They don't always have to, but I stayed patient, waited for things to become overbought, and once direction became favorable, I wasn't afraid to take the position and step on the gas when direction was more clear. And it looks like we're really just getting into it, if anything. So I still have part of my position open right now. Previous support range, as you can see, right around 131. So just a little heads up on that. We'll see if we can get that break below, hopefully before Jerome Powell begins to speak. So why Coinbase though? With the new ETF, in my honest opinion, Coinbase is useless, only generates income from transaction fees. Not a fan. I'm not a fan of it either, Charlie. I don't think you understand. I'm not buying it. I'm not investing in it. I'm shorting it, meaning that I'm making money as it sells off. So I thought it was overhyped. Just like Bitcoin, right? When it rallied up, hit highs of 187. The Bitcoin ETF then was released. I really do believe that, and again, it's just maybe, I think because of what happened the day before, the spot Bitcoin ETF approval, where there was that fake out, I really don't think that it gave Bitcoin the chance to rally, or it didn't give coin the chance to rally, because there was too much of a concern on that fake out, that it kind of ruined it for the following day where it actually got approved, because at that point, I feel like there's so much fear already instilled in the market due to that uncertainty. We did see Bitcoin run up to 49 for a little bit, and then it just absolutely crashed. So, I mean, it just made things easier for me because I was shorting coin. But it's just, I mean, I still feel for the other side. It's unfortunate, but at the end of it, again, your emotions don't make you money. The trades you take do, right? So I just decided to not overcomplicate it and go with the flow. And market began dropping, and I began shorting. I think we just broke 10,000. Yep, $10,000 on the day. There we go. How's the homeless situation? There's still homeless people on the side of the building. Don't worry, we'll take care of it though. I should throw that spot up on Airbnb. Try to put it up for like 25 bucks a day and be like, hey, you can pay for that. Not funny? No? It takes money to make money, brother. I'm trying to. Can't leave them alone when they're on my private property. Taking shits and throwing up needles up in their arm. They're bleeding all over the place. I don't know about you, but if you want me to leave them alone, send me your address, D Brown. I'll ship them over to you so you can take care of them and leave them alone. I'd love to. Put a TV outside. Might as well. Are you guys out? Yeah? Nice seeing you, old boy. Take care.
We're back soon.
All right, Connor. Great seeing you. Take care, brother.
See you guys. Have a safe flight.
Don't step on a needle out there. All right, we have 18 minutes until Jerome Powell begins to speak. So just a heads up, the Federal Reserve FOMC meeting announced a rate pause. We're giving it, there's 16 more minutes. And then Jerome Powell is going to be going live. You're going to be able to see him there. You're also going to be able to see him in my screen. And we're going to hear him pretty much share his feedback on how they came to the decision of a pause. And then he's going to be answering some questions. So again, if you would like me to continue to host the live stream, all I ask you to do is drop a thumbs up and get this video to over 1,000 likes. So if you're in Miami and homeless refuse to go to a shelter, you can get arrested. I wish we were like that here in Arizona. The only reason that this lady got arrested is because she got caught with drugs on her. So she did get arrested, but fortunately for her, when she was released, she just came back and built out her crib a little bit more. Do you think that he will confirm a recession? No. Ricky, are you eating Chipotle? Yeah. Chipotle. I didn't know that I got it with all these fajitas. Has the illegal immigrant crossing affected the area you live in? No, not for me. I haven't seen my cousins yet. No. Not in our area. I'm Mexican. Oh, crap, man. Jesus. That's what I get for my joke. But no, I haven't seen any of it. What's going on, Andrew? So I'm in Texas, and that shit is intense. I bet, man. Yeah, Texas seems to be more in the... If Texas becomes its own, right, they're trying to fight to become its own country. Guys might be moving to Texas. Right? Isn't that kind of wild? I guess we should... Yeah. What? Someone said I look Russian? Might want to get your eyes checked, buddy. The last thing. All right. A lot of consolidation happening right before Jerome Powell speaks. We got 13 minutes. I'm probably not going to want to hold this position because if markets begin to recover, we've seen this happen. Markets sell off during the first part. Jerome Powell begins to speak, and all of a sudden, markets can begin to recover. You don't have to. You can continue to hold your positions. You can do whatever you want. You're an adult, right? But I'm just sharing with you that I've seen many times that markets begin to change direction shortly after Jerome Powell begins to speak. I don't know why that happens. It's not like he's saying anything different. He literally reads a script almost every single time. It's just how the market reacts. There it goes, reduced it. I'm at $9,800 for the day. Let's close out strong right before he begins to speak. We have 12 minutes left. So I'll leave it there. So if you guys ever ask, oh, Ricky, what is it like to watch you trade live in the mornings? It's similar to this. So if I'm taking a trade during the live trading session, I'm explaining my thought process behind the trade. You get to see the entries I take. You get to see the exits. And it's similar to this in the sense that you get an inside look behind not just my trades, but also the thought process that goes into them. And there it goes. We're seeing a little bit more sell-in pressure. I know I should play it safe. I'm just going to buy the cover here. All right. Fully covered my position, fully closed out. I left myself with my one lucky share. And watch this. There's a common saying within our LPP team. Anytime I close out my positions, it actually ends up going even more in my favor. But I don't get a benefit from it. So I just closed out my short, meaning that I was making money as it was selling off. We're approaching the previous support range of 131 flat. You can see that it's pulling on back, testing that same support. I wanted to play it safe, not just because we're approaching support, but because Jerome Powell's about to speak in 10 minutes. And I just don't want to get caught holding a position that might quickly change direction. So I was making money as Coinbase was losing money. Losing value is the best way to put it. So I had negative shares. That's the way that it's explained. You have negative shares when you short, and then you buy them to cover. So I'm going to announce it to my LPP team just in case they're not watching. So just closed my short on coin. We are live if you want to tune in. And again, if you want access to all of these updates, and there it goes. Coin is actively selling off, going back to lows of 131. But it's okay. Remember, my trades are never going to be perfect, and that's all right. I decided to play it a little bit on the safer side just because in preparation of what might happen. But if you want to tune on in, these live trading sessions that are exclusive and that happen every single morning, if you're an absolute beginner and you want access to this, it's the second link in the description down below. Or if you have any questions before signing up, shoot me a DM via Discord or via Instagram, and that's the first or third link in the description of this video. Okay. You're out?
Yeah.
All right, brother. Gonna say bye to me or what? I don't care.
See you, bro.
Yeah, nice seeing you, brother.
Good
Take
luck.
care.
See you, dude.
We'll see you in Gilbert.
Gilbert Goons.
Oh, bro. Jeez Louise, man. It's simplicity he focuses on. Yep. Options are more risky. So are you interested in promoting an AI tool for trading? No, not at all. I get a bunch of emails about that. I'm not interested, and I mean this. It's just I'm not going to be your guy for it. If you want me to promote something when it comes down to that, just it's not my thing. But I appreciate you taking me into consideration. Where you at, Rookie? We're here at our office. We're at the TechBuds HQ office. We're in Chandler, Arizona. If you're part of our LPP team, you're always welcome to message me if you want to just visit us. We're open Monday through Friday. You do have to message us before you come on in, and you can't be a weirdo. So if you're a weirdo, I'm sorry. I don't care if you're part of LPP. You're not allowed. But if you're normal and you want to hang out and get some work done, then message me and we'll send you the address and a time for you to come on in and get some work done. Maybe come out in a few videos. Brother, you gonna have the Powell speech? Oh shoot, yeah, it turned off. It starts in 8 minutes. Can you guys see it okay? So it's gonna be popping up right there. Look at that. Pulling on back to 131. 14,000 watching for them. Sweet. There it goes. Retracement all the way back to previous support range. We'll see. Oh, looks like it's breaking below 131. And there it goes. Wow. This is where the FOMO kicks in. But it's okay. So as you can see, my position's closed. I left myself with my one lucky share. It's all good. Green is green. Can't be greedy. My trades will never be perfect, but damn, that sucks for me. Do you have my phone? Do you know where my phone's at? Thank you. Okay. So Ricky, let a couple of weirdos outside so they can go take care of the crackhead. Nah, I wouldn't want to put anyone in any danger. Boom. I'm happy with it. Glad we closed out the position. How do I message you on Discord? I'm part of the LPP team. Super simple. First off, I explain it in the course on how to message anyone. But if you see my bubble, right, because you could see all of my bubbles here, what you would do is you would right click on my name and then click message, and then you will directly message me. So that's how you message me directly via Discord if you're part of our LPP team. If you're not part of it yet, second link in the description down below. Nice pullback. Okay. We have 5 minutes left. 5 minutes, guys, till Jerome Powell begins to speak. Let's see if we can get 1,000 likes. We're nearly at 800, 1,000 likes. All you need to do is smash that like button, subscribe to the channel. So options are only stocks traded on LPP. Is that Michelle? Michelle, I only focus on trading shares. As you probably have seen, I've never uploaded a video about trading options. I don't trade options. I don't pretend to trade options. It's not my thing. So I focus on beginner videos about getting started in the stock market. My main focus is normally focusing on NASDAQ, and I normally focus on trading a pair of ETFs known as TQs and SQs. But I do branch off kind of like I have for the past 2 to 3 weeks. And I love shorting. It's broken down in the course, especially when markets are very overbought or individual stocks are very overextended. I love to short them on the way down. It upsets a lot of people because They're normally holding a position, hoping that it continues to go up, but kind of just like any pump and dump, right? At the end of it, they're going to end up correcting themselves. So I can either feel bad for those people or at least warn them. As you've seen many of the videos that I make, I always try to make warning videos about when markets are overextended or when individual stocks are overextended. And of course, I short the crap out of them when they begin to drop. That's my job as a trader. We're all here for the same reason, and that's to make money. And there's nothing else to it. Will I learn how to short when I join LPP? The videos are covered in the lesson library, and you also get access to my daily live sessions, which I cover. You can see my short positions that I take every time if I open up a short position during those lives. I need a charger. Give me one quick second. I have my charger. I just need one that will reach here. Do you guys like this angle? Is this angle okay? Can you guys see that okay? It's on the side pocket. That doesn't reach, huh?
They're all going to be the same distance.
Yeah. I can move a little over. Yeah, I'm going to have to. Do you want to pull that with me? Ready, set.
It actually looks better too. Let's put a napkin on here.
Yeah. The thing about this is that my charger is on that port and it's being covered. Oh, how are we gonna do that? Because then it would air out the live stream. Jerome Powell, he speaks in 1 minute, so we'll see how much of it I cover.
Right now?
I'm at like 10%, 7%. Yeah. These live streams eat up a lot of the juice. It's all good. Give me one. Let me see. Jerome Powell speaks in less than 1 minute. Again, if you're tuning on in, drop a thumbs up, subscribe to the channel. We should be hearing him any second now. Maybe I can turn my... Yeah, there's no way. I'm going to have to figure that out right now. Let me see if I could switch the camera for just a little bit. Can you check the quality of the stream when I do this? Ready? Okay. Lovely.
Come this way.
No. I'm gonna switch it back. There we go. Test. We're good. Lovely.
Business.
Good?
Yep.
Okay.
Only thing is the screen's kind of blurred out now because the focus. Focal.
Oh, that's fine though.
But you can.
I'm gonna be sharing the screen on my screen anyways.
Is he 2 minutes late or?
Coin trying to find a support. Looks like one of you guys liked my Wall Street tee that I'm wearing. You just picked it up from Shop Tech Buds. My Wall Street tee, all the different t-shirts we have on the site. You guys can feel free to check it out. It's the 4th link in the description down below, or shoptechbuds.com. I do not know where Jerome Powell's at. He's 3 minutes late already. Powell speaking?
See if you can fast forward the live.
I'm on the wrong stream. Check to see if that live is live.
Oh my gosh, it wasn't live.
That's why I was like, is he? Tom Williams 2 minutes late.
Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
This is a script.
We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
That's really good.
But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. Data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Gina Smiley from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, a sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down.
Wow.
So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy as well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
Beautiful.
So,
Opening short again.
as you know,
wait.
almost every participant on the committee does believe that it will be appropriate to reduce rates. And
Good thing we locked in
partly for the
profits,
reasons
right?
that you say. You know,
Did we not say?
feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our Teal book, and they're in all the materials that we look at. But, you know, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see, the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Love that.
Hi, thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above. Core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates? Yes.
So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well. The labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things, would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down, that's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached? Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did, talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering, moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that. Including? Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation, so the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Steve.
Drop it.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that, working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision, but a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate the neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market by many measures is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think, job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to what is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance. And that's what we want to see. And, one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall, there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Chris. I like that. Yeah.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here, and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? What will, when we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see. Yeah, we'll look at those. Last year was a surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And, of course, 12-month inflation is above target and getting down closer to target. It's not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question, which we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward. Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So
Did I close
if you
too
take
early?
that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that.
Good.
But that's to be seen. So I wouldn't call, when you ask me about in the near term, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is
is this the start of when we see a cut, is it the start of a cutting cycle, or could it just be a one-off?
That's going to depend on the data. The whole thing is this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that. And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves. We talked about there are risks that would cause us to go slower. For example, stronger inflation, more persistent inflation. There are risks that would cause us to go, if they happened, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation.
Wow.
Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
Closed too early, huh?
Victoria. Hi, Victoria Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about, the level of wage growth that's consistent with 2% inflation. We've obviously...
Well, we are there at that 30-minute mark. You guys saw me not only take my short position and cover on the original sell-off right before Jerome Powell spoke, but like I said, I also gave the announcement that normally we see a quick change of direction when he begins to speak, which we did, which again, that doesn't always happen, but I've seen it happen before, so that's why I give out that warning, just based off of my experience. Became overbought, it went back to retest previous highs. It did the same thing with overall NASDAQ market, as you can see. It went back to retest previous highs, and it ended up getting rejected. Now we're actively selling off. I closed my short position on coin, so I'm not making any more money other than with my one lucky share. But that is it. At least we're able to catch two solid trades on literally the same move. I didn't go long on this. I caught it on the way down, and I caught it on the way down. So that's it. This is why we talk about waiting for an opportunity to present itself. This is why we talk about waiting for FOMC report to come out, because you don't have to trade right when it comes out. You can give it time for markets to become overbought, oversold, and wait for these larger setups where more money is made and when direction is a little bit more clear. So again, I love hosting these live sessions. I hope that you guys enjoyed it. I also do want to remind you again, we do trade live every morning, just like what you got to see. You get to see every entry, every exit. It's designed for complete beginners, and you also get access to our A to Z video lesson library, which is the second link in the description down below. So LPP, it's a one-time payment, lifetime access. It's 50% off right now, which is our biggest discount ever. And if you want access to it, second link in the description down below, and you get lifetime access to being able to watch me trade live every single day, and you also get access to that A to Z video lesson library that's designed for complete beginners. So I hope that I earned your thumbs up. I hope that you guys enjoyed this video. Don't forget to drop a thumbs up and subscribe. If you have any questions, shoot me a DM when it comes down to our t-shirts, when it comes down to the LPP lesson library. Again, literally everything from the trading application that I use. Take 1 minute. View our description. Everything is linked down below on how to stay connected, how to watch me trade live, how to, pick up some either trading merch if you guys want to, or what trading application I use. So it's all linked in the description down below. I appreciate your time. Like always, let's make sure that we